quarterly webinar with Token Relations. Joining me today is the Injective Labs Head of BD, Mirza, and DevRel Engineer, Brendan. Hey guys, how's it going?
It's going well. How are you?
I'm good. I'm excited to talk to you today. There's a lot of ground for us to cover. Before we get started, I would like to start with some background and context. Injective has seen a number of new developments in this past quarter, in addition to bridging DeFi with TradFi, which we'll get into in depth during this discussion. Injective also hosted its summit event in New York City, where the team announced iBuild, Injective Council, and its EVM Testnet. In addition, the network has made strides to bridge DeFi and TradFi through iAssets, which has seen more than $1.2 billion in volume. And Canary Capital even filed for a staked Injective ETF, which could open the gate to more adoption. To start off, I want to talk about the Injective Summit that happened in June, because there was a lot of developments there. Mirza, what was kind of the impetus behind these initiatives or tools announced there, like iBuild, Injective Council, and the EVM? How does this kind of play into Injective's overall mission?
Yeah, that's a great way to start. So I think a good framing is all of these different aspects touch on different components of what we're trying to achieve. So on a high level, what is Injective, right? Injective is trying to be this amazing blockchain for finance. On a high level, that means it's easier than ever for developers to come in and build on Injective. And it also means it's easy for people to come and access those applications. So that's what some of these announcements or tool sets were really about. So when you think about iBuild, what is iBuild? We can get into detail later, but basically it allows you to use text-based prompts in order to generate production-ready applications on top of Injective. So one huge barrier to entry in crypto in general was the fact that, hey, it's really hard to build in crypto. No one understands this jargon. No one has any idea what's going on. So what if you could use text prompts as simple as you talk to ChatGPT to generate applications? For example, saying a prompt like, hey, I'm Jacquelyn. I wish to build a lending app, and the lending app should offer 10% APY. It should accept BTC and ETH as collateral, and help me build this app. And you can customize parameters for the UI, how you want the yield to be generated, etc., just with iBuild. So that's the iBuild component. The EVM component was really a part of this as well, because we realized a lot of developers, 90% plus even today, are on EVM. So we had this very advanced WASM layer, which is really good for things like building exchanges, building hyper-performance applications. But when you think about the general mindshare in crypto, it's mainly still in EVM. So we wanted to allow for that, allow for developers to come and build on Injective without saying, hey, I have no idea how to code in Rust, how to program in Rust. I want to program in Solidity, which is the primary language for EVM. So that was sort of the impetus behind the EVM launch, where we wanted to have this really hyper-performant multi-VM layer where a developer can know Rust, they can know Solidity, but they can still build on Injective. So that was sort of the reasoning behind iBuild and EVM. Injective Council is a whole different animal, because Injective Council is really saying, it's cool that we're in our own fairy tale world where we think blockchain is amazing and everyone is going to come and use it once we build it. But over time, over the past few years, we realized that's not really the case. These large institutions require a lot more hand-holding, a lot more custom work on the chain level in order to say, hey, I'm Citibank. I want to tokenize these assets. I want to now use Injective for it. It's not that simple. You need to build a lot of different rails, whether it be compliance guards, whether it be different ways to monitor that whether or not a North Korean agent might be using your chain. That's what they tend to care about. It's not just about the tech itself. The council, long story short, is really a place for us to work with these institutions hand in hand. So the council today includes people like Binance Labs, Galaxy Digital, all the way up to people like T-Mobile and Google Cloud. So by working with these enterprises, they kind of tell us that, hey, Injective, we want you to do XYZ things in order to appeal to enterprises. So when we go to these different institutions, we've already done the heavy lifting. The council is basically a way for us to govern the chain and for us to work with them on different initiatives. We meet once every 2 months, and we work on different initiatives together to make Injective a better chain, tailor-made for finance and institutions. But I'm glossing over all the finer details on all of these different things. So
we'll get into it.
Yeah, we'll get into it.
No, that was really impressive, honestly. You gave us like the summary for all three of them, and it made a lot of sense. So I'm glad we got that high level overview before we really go into it. On the iBuild front though, Mirza, you joked that I could create, my own lending app, right? Do you kind of see that people that are non-technical are actually launching these types of apps on Injective?
Yes, I do see that. So basically, the idea, and me and Brendan have been talking about it the last few days as well, and we even were talking about it last night, where it should be as easy to launch dApps as it is to launch tokens. Everyone in crypto today just wants to launch a new token, and there's so many different platforms to help normal everyday users launch tokens, whether it be different launch pads, etc. But we don't see the same thing on the app level, which is why we see so many, in my opinion, meme tokens that intrinsically don't have a function other than its mimetic value, but we don't really see many apps because the issue is it takes millions of dollars to build some of these apps, and you need lots of time, and not many people have a year to build an app and or billions of dollars in funding. So we wanted to lower that barrier to entry and say, hey, what if I, who doesn't really know how to program, can go in and build an app, production ready. That's how it works in normal startup land. You have so many non-technical people building these amazing startups because there are tool sets that exist, from very basic tool sets like WordPress or Squarespace that let you build websites, to all the way now you have AI-based agents that help you build your own production-ready startups or apps on your iPhone. But that doesn't exist in crypto today. Crypto loves nerd sniping people, in my opinion, where they love just talking about the tech. So I do think people will build it if the tool sets are easy, and if it is indeed as intuitive to build an app as it is to build an agent or a token today.
Right. For the Injective EVM part, it integrates with the EVM environment with Injective's financial modules, which essentially kind of opens up the gates to the whole Ethereum mainnet side of things. How do you kind of see this changing the total addressable market, or TAM, for the chain and the market share that developers are able to tap into now?
Yeah, this is really the crux of the problem, right? So a very quick history lesson. Injective started off in EVM land. We faced many complications when trying to deploy EVM back in 2020 because a lot of let's just say a lot of the tool sets were very nascent and not very high performance. So we needed a very high performance smart contracting layer, which is why we went with WASM. So we ditched EVM, went with WASM, which is great because we built this really high performance exchange like Helix, and people were able to come and trade on it. Institutions were able to come and integrate, but the TAM is super low. So WASM, you might be familiar with some popular chains like Cosmos. They use WASM. Injective pretty much has every app that exists in WASM land today, in WASM land, which is really like 30, 35 apps max. And I'm not really exaggerating that number. There are very few developers in WASM land because it's like way more advanced, it's way more niche. EVM is the entire market. Every app you use today, whether it be Aave or Uniswap, it's pretty much built on EVM. The only VM environment, in my opinion, that's had any remote level of success outside of EVM has been SVM. But even SVM is likely less than 5% of market share. SVM is the Solana virtual machine. I would say it would, I'm not even exaggerating, maybe 100x our possible TAM, because WASM is likely used by less than 1% of developers today, crypto developers. Brendan can speak better to this than I can likely, but I think that's the main reason we went this route, because now we allow for people to come and experiment and not be bottlenecked by some complicated programming language that they need to learn, which is Rust. They can just code in Solidity. They can build and deploy and test more easily. And the environment is so robust now for EVM because you have some amazing chains out there, whether it be, of course, Ethereum, but also some amazing L2s out there, and some other L1s, EVM-based L1s that are coming out, that have spent an enormous amount of money, billions and billions of dollars, to make the developer environment super friendly. So I think EVM is getting even better and better as time goes by.
Yeah, Brendan, I'd love your take on this, and to kind of pull you into the conversation, like what are the specific tools or support initiatives that Injective is doing to provide these developers a better DeFi landscape with all of this in mind?
Yeah. So some, I guess, really basic things is that EVM stands for Ethereum Virtual Machine because that's where it started. But now it is no longer specific to one particular network. It's not Ethereum specific. It's kind of become a language or a protocol, right, that many different chains understand. And what the benefit of this is that you have a lot of really mature, Mirza alluded to how immature it used to be. I think it's probably referring to around the 2018 time, where it was really very, very difficult, and you really had to be an expert to get anything working at all on Ethereum or any EVM for that matter, right? But now you've got build tools like Hardhat, Foundry. You've got libraries like Ethers.js, VM, etc. Right? Like you've got all of these things that are fairly mature technology stacks that you can build your smart contracts and dApps with. And the benefit is that if it works on one EVM, it works on all the EVMs with just very minor tweaks. So that goes for Injective as well. It's a benefit that we get from adopting EVM. So Hardhat, Foundry, Ethers.js, VM, all the things I just mentioned, they all just work on EVM, on Injective's EVM, right out of the box. The only thing is you have to change the network configuration. The other thing, just to riff on what Mirza mentioned earlier on, is that Injective started off with having like a financial exchange or financial products as its main thing, right? And that's its unique selling proposition. And now what has happened with the EVM is that we've done it in a very clever way using something called pre-compiles, where the EVM, which doesn't have any of these features that Injective has built in natively, right, with the exchange, etc., that's easy to spin up. You can just basically talk to those things through pre-compiles. So we're not 100% there yet, but I believe eventually we get to a point where the Injective EVM is able to talk to all of the Injective native APIs as well. And that'll be really powerful because then you can do a lot of things on Injective EVM that you can't exactly do with the EVM on other networks, right? And at the same time, you still have all the benefits of having an EVM.
I think in regards to that, Brendan, I'm curious your thoughts on, or I guess the conversations you're having with developers. What do they want more of today, both on Injective, but also across the EVM ecosystem in regards to really tapping into this market and kind of making things more accessible? What is kind of like the relationship or conversations you're having on that front?
Right. So I guess you could say, like, generically, like with any blockchain, there is a very steep learning curve, right? And that is something that I guess the industry as a whole needs to do a better job of, right? Yeah. It is much easier to get started programming in what we would call Web 2 technologies than it is in Web 3. And there are some reasons for that, which would take an entire podcast to cover at least. But yeah, like there's the good thing about that is that there's a lot of low-hanging fruit, right? So for example, right, if you want a page to load, that's just a regular Web 2 website, right? The golden standard is like 500 milliseconds, like half a second, right? In Web 3, we've come to accept far slower than that, right? Can we change that? Right? And there are ways to do it. So that's just one example, right? So improving the user experience of people who are trying to use your dApps, right? And of course, as a blockchain, right, our users, Injective's users, are indirectly the end users. The direct users are actually developers, right? And so improving their developer experience is also like a top priority for us.
And we also have institutions coming in, which I believe both of you could chime in on this front, but how does that kind of shift the developer pool and what's possible on Injective, as well as like the mindset of these developers with institutions in mind?
Yeah, I think it basically is good and bad, and I'll explain why. It's a double-edged sword. Right. So it's good because institutions are coming, and that's what blockchain wants. But what it makes you realize is these institutions are not crypto native in any way. For the most part, they're Web 2 native. They're just If any of you have worked in a corporation before, and some of you might have, you'll notice that a lot of these corporations to this day, like when we started working there, we're using like Windows XP, and it was like 2015. So they're very, very behind is my main point. So it basically makes the blockchain catch up and say, hey, we need to future-proof our tech. We built all this great tech, but we need to make it as easy as possible to onboard, because a normal everyday user might be able to read some Reddit forums and figure out how to develop, but an institution will not do that. You need all the right documentation. You need all the right tutorials. You need to really, like, I don't want to use this word, but like dummy-proof the product that you're building. Which is good, because if you do that, that means anyone who might have had an issue onboarding can now onboard, right? So it allows you to really make your platform more accessible, in my opinion, once institutions start coming. Secondly, I think it makes you think like not a startup, but a larger company. So when you're a startup, you're trying to really move fast and break things, right? That's the age-old quote, where you're just trying to push things out, push developments out. But institutions want to take things slow. They care a lot about compliance. They care a lot about making sure that, hey, like, will this be scalable? Can I actually transact billions of dollars here? Or will this be like a random project that randomly goes down time to time, right? So it's a lot about these little questions people often gloss over when they're building a really, let's say, low barrier to entry startup. So let's say they're trying to build an AMM. It doesn't matter if the AMM goes down, but it would matter if, let's say, Bank of America is tokenizing an asset and suddenly all those loans are gone from the blockchain because something happened or there was an error. So it's a lot about putting a lot more resources and capital into making sure there's better uptime, speed, finality. So that's what I think the institutional landscape has changed for crypto, especially in the last year, since institutions have become more receptive to crypto, I would say, where we're having to think about these questions more than ever. I would say Injective is in a unique position because we've had a head start when it comes to this, and I'll leave this as my final note, because our blockchain initially was about exchanges. So being able to have really high performance exchanges. What do you need for high performance exchanges? You need money, you need liquidity. And the liquidity almost always has to come from institutions. So as far back as 2021, in order to cater to guys like Jump Crypto or Galaxy Digital, we had to build all these rails or think about these questions far in advance, questions about compliance. So I would say we have several years of head start when it comes to this, because we're already thinking in this manner, because that's what Jump and all these others wanted from the beginning. They didn't care that we were this ultra fast great chain. They just cared about compliance and all these other issues. So that's what I think the institutional sort of viewpoint is changing for crypto.
Yeah, Brendan, what are you seeing?
Yeah, I'll add one more thing from a sort of like a more engineering angle, right? So one thing that I've observed with institutions is that they kind of want a packaged solution, right? So they're not as scrappy as startups, where they'll be like, okay, here's my engineering team, like let them, sort of read your docs and figure it out, right? They have a demand for things like an admin panel where I can just log in and fill in a form, and I can get like a dashboard and stuff like that. That's the kind of thing that they want. They want more plug and play solutions, rather than here's the docs, here's the API, go figure it out, right? Which is, that latter thing works really well for independent developers, startups, but for institutions, they want a more packaged product.
Mm. I think also like simplicity is the word that keeps coming to mind while you two are talking, and obviously accessibility, but like the existing TradFi rails are already so complex that if we're going to present a new technology, it has to be understandable and better than whatever exists in the traditional side, right? So I think about that a lot too. And then Mirza, I know you're also talking about tools that can attract institutions, as well as Brendan. And also what came to mind was iAssets, which is the solution that Injective is working on to kind of improve this composability and capital efficiency within the decentralized markets. And I know that it's done over 1.2 billion in volume since the beginning of the year, which is no small feat, I'm sure. There's a lot of talk about tokenization of assets, bringing finance on chain. how do you kind of see iAssets expanding from where we are today into, let's say, the next 6 to 12 months?
Yeah, this is a question we think a lot about because as I would say Injective started really early on this front. Back in 2021, we tried tokenizing some assets, I would say. Back then, they were referred to as synthetics. But we tried creating synthetic products like Tesla stock and GameStop stock due to like our lawyer basically saying like, hey, you can't launch this. We kind of stopped. But that all changed in 2024, I would say, after the elections where people started taking more risk and saying like, hey, the SEC seems more willing to work with us. I would say everyone is trying to tokenize assets, but people need to have second order thinking, in my honest opinion, when it comes to tokenization of assets. So what I mean by that is no one cares if you just have the same stock on chain that you would in Robinhood, right? Because right now you might have noticed that Gemini, Robinhood, all these big entities are also tokenizing stocks or providing access to tokenized stocks. A normal retail user could care less if the Tesla stock that they're buying is tokenized or not. They're not buying an asset because it's tokenized. They're buying it because it gives them some form of advantage. If you go as far back as Robinhood, people didn't use Robinhood because they're like, hey, I can buy Tesla stock here. They use Robinhood because it offered no fees. So I think that's what's missing in crypto, where people just think like, hey, we're going to tokenize everything and people will come. Injective takes a different viewpoint on this, and this is where I think we're headed in the next year, where we're saying, no, I don't think it's enough for us to tokenize an asset. No one cares that we tokenize Tesla or tokenize the S&P 500. People care if they have access of some kind that they can't get elsewhere. So let's say 24/7 trading access would be a must, because many regions, like Brendan is in Singapore, they might be asleep when the stock market is open here in the US. So that's a big part of it. Second is leverage. We've seen this in crypto time and again, where we think, think about the transition from sexes to even dexes. A lot of people came to dexes, or a lot of people started trading crypto on places like Binance because they offered interesting products like perpetuals, which you don't get on a place like, let's say, Robinhood, right? So people in crypto or crypto enthusiasts really care about leverage. So that's what iAssets also enable, where on many of these assets like gold, you can go up to 100x leverage because gold trades in very, well, recently it's been more volatile, but gold usually trades very steadily. But if you can trade leverage, you can technically optimize your returns more. That's what people care about. So access, leverage, and the third point is just composability. I think a lot of these tokenized assets are behind KYC gated walls, which doesn't solve any problem in my opinion, because for instance, a lot of people talk about tokenizing stocks or tokenizing commodities, but if you're behind some KYC wall, what's the point? You might as well have started a Charles Schwab account. The point of DeFi is for things to be permissionless. So I think that aspect where an asset, a user can come from Arbitrum or Optimism and come onto Injective easily and just access the asset without some crazy KYC hurdle, etc., and access the asset permissionlessly like they would in ETH perp is very important to us. So once you have enshrined, in my opinion, leverage, accessibility, and composability, it becomes very, very much a reason why someone would leave Robinhood to use crypto to access or use on-chain rails to access these assets. But otherwise, it's not going to matter. I think like it's cute. It's a cute announcement when people are like, hey, we tokenized all these stocks, but if no one uses it, what's the point? And that's what we really think about. And that's what we realized over time, because initially we thought that as soon as we tokenized assets, people will come. People were thinking this as far back as 2021, like Synthetics was doing this, we were doing this, a lot of people were doing it, but no one actually used it, right? And that's why even platforms like Synthetics, Synthetics with an X, ended up pivoting and going into other product areas because no one wanted these assets. They realized on-chain. So that's why when, even as the market trends were shifting a couple of years ago, we realized like, hey, let's not make the same mistakes again. Let's not just wrap assets. Let's actually make iAssets different or make these tokenized assets different, where people would actually have an incentive to leave Coinbase or Robinhood to come use us. So that's how we sort of think about the process of tokenization, in my opinion, internally.
Yeah. I'll add on a little bit more. So coming back to what Mirza just mentioned about like why would anyone want to use Robinhood or like a TradFi, account? And the reason was because it was zero trading fees, right? So what does Injective have on that front, right? It has two things that I think make it different. One is that we have something called a Web3 gateway, which allows whoever is the operator of the market, right, to say, hey, I want to use this Web3 feature, Web3 gateway feature, where I'm going to delegate the fees, right? So instead of the user paying the fees, someone else pays the fees that you delegate to and accepts that, and so that can be the market itself. So that way you can, as the owner of a decentralized exchange that is trading iAssets, you have the option to say, hey, I'm going to pay the transaction fees or the gas fees for all of the trades for all of my users, or I'm going to subsidize it, or whatever it is that you choose, right? That's your prerogative to do that, and so that is enabled, right? The other thing that I think is like quite cool, and I literally just learned this yesterday. I'm fairly new at Injective, by the way, just just so you know, is that it is like, in order to tokenize an asset, what is the thing that you need, right? You need collateral, which translates to liquidity. What iAssets has added is that you can essentially pool the liquidity. So you don't need to have liquidity in full for every single thing, but you can have a basket, right, which says, okay, so this is the shared liquidity between all these things. So on aggregate, we're covered, that sort of thing. So that makes the capital more efficient, right, and that makes it easier or more accessible for people to tokenize, whichever stocks they want or whatever asset it is into iAssets. So yeah, that's like the other thing that makes it different from a TradFi approach or a Robinhood style approach, or like a neobank approach.
I definitely see the purpose for it too outside of the US, but stateside, how do you kind of think about tokenization and these on-chain assets as like a value prop to people who have access to these US equities and everything? Obviously, it's not just about putting it on chain like you guys mentioned, but also creating like more value. And I think it's very clear and evident globally, but what about for those who are in the US?
Well, I can talk to the first part, which is like access to US stocks outside of the US. So in Singapore, that isn't a problem, right? Because our financial markets are fairly advanced and very interconnected globally. But just in the region in Southeast Asia, I can say that it's like an uphill battle, to get anything working with regard to international stock trading. Like, it is not as accessible as it is here. So yeah, like definitely being able to access it on blockchain permissionlessly, that's definitely going to make things easier. And in fact, like even in Singapore, like there are some hurdles as well, right? And the TradFi brokerages, their apps, they feel like they're built in the 90s, so
Right.
so I'd rather use a blockchain. Like, this is one of the areas where blockchains actually have a better user experience than TradFi. Yeah, that's it. But then I can take the question.
Yeah, sure. There's a few things. One is actually, it's just me, or is Brendan like getting stuck?
A little bit.
Yeah,
He's coming back.
a little. Okay, cool. There's a few things. One, US users likely want exposure to different assets that they don't have. So for instance, not just US stocks, but let's say access to stocks in Europe, or access to the euro, different FX trading pairs. So one is access, but I agree, what US users really care about, and the US is a very high income country, they don't lack access. If they really want, they can open up their app and get access to many of these things pretty easily. They just, and I'm not trying to be mean, they just care about making money. That's why many of them use crypto. So the money-making aspect has to be leverage. So you need leverage because people love going on leverage in order to maximize their returns. And number two, they need to be able to earn yield on their assets in some way. So it's not just about buying that tokenized assets on chain, but being able to use it somehow. So for instance, I own a tokenized Tesla stock, let's say, or a tokenized iAsset that we built. You might be able to get more value out of it if you can take a loan out against it on chain, just like we've seen people do with Aave. So by doing that, you can maximize your returns even further. Let's say as an example, you put $1,000 into Tesla stock, let's say it doubles, now you have $2,000. Now you can take a loan out against it, similar to you buying a house. You can take a loan out against it, and you can use that money on a lot of different other applications, whether it be trading, whether it be yield farming, etc. So that composability aspect becomes very important for US users, in my opinion, and that's what people do on chain. They just care about trading on leverage. They care about yield. Those are the two use cases that have come back every single cycle, no matter what. So when you tokenize assets, you need those to be embedded into the system, whether it be yield, earning some passive yield, so people have a reason to hold it on chain, because no one is going to go through all the hurdles, and people often forget this, like how they get on chain. No one's going to go through the hurdle of transferring money from their Bank of America account into Coinbase to a MetaMask account, just if they can access the same Tesla stock as their Robinhood account, right? Like all those hops require fees and time. No one's going to do that. The only reason someone would do that is if the returns are enormous. So in my opinion, yields of above 10% would incentivize someone to do that, because traditional yield is around 4 or 5%. So doubling yield helps. And number two, being able to go on leverage, which many of these platforms don't let you do. And three, being able to trade 24/7. But I think the 24/7 part is slowly going away, because everyone is pretty much moving to 24/7 these days, including like Charles Schwab. So I think that advantage will go away, and the no fee stuff will go away as well, because everyone is pretty much allowing you to trade no fees. But I think no one, at least in the next few years, like Robinhood or Charles Schwab, will allow you to take on massive leverage or use these products to take out loans. That's where I think on-chain companies like Injective can really shine, by offering these other use cases.
Right. No, that makes a lot of sense. Are there any specific, sorry, go ahead, Brendan.
Oh, I was going to tack on to Mirza's point about composability, right? So this is something that I also just learned, yesterday, that was possible. Like in theory, you could take an iAsset, right, or create a new iAsset that is composed of multiple other iAssets, right? So you could build your own ETF, right? Now, can you do that in TradFi, like, or even in a neobank like Robinhood? I don't think you can, right? But because of the composability, if you can figure out how to wire things together using code, then you could in theory do that. So that's something that I found out recently, and I was like, oh, this is really exciting.
Yeah, no, for sure. Brendan, are there any specific tools or kind of integrations that are being planned on the back end to kind of enhance this interoperability and composability, maybe into other ecosystems too?
Okay, so with the one that I just mentioned, there needs to be, I think there needs to be a proposal in order for that to happen. And so one of the ideas that Mirza and I were just discussing was that, hey, like, why such that this is possible to do without having to write any code? Why don't you just do it inside the user interface, like with other types of proposal? So that's Mirza, did you have any others?
Yeah, we are in very early stages. I'm not going to lie to you, but here's what I think can happen. So one thing we want to do a lot with iAssets is just permissionless bridging. So having platforms like Layer 0, etc., accept these assets. So then a user on another chain like Ethereum or Solana can also access these assets that we're building. So for instance, you can envision a world where it works similarly to how a normal token like USDT operates today, where I can bridge it from Injective to Solana, put it into a Solana lending protocol, and earn yield on that. So that would enable a whole world of opportunity, where if you could have Tesla stock that can travel from Injective to Solana via a bridge like Layer 0 or Wormhole, and then some platform on Solana, like a dApp, let's say Camino, is offering yield on that asset, then you can take that Tesla stock and put 50% on Injective and yield farm on Injective, and put the other 50% on Camino, which helps you risk manage, which helps you earn maybe additional yield. I think we're closer than ever, but I think some of the things I mentioned earlier are very much necessary for this to become a reality. So for instance, you need to enable permissionless trading of these assets or bridging. You can't gate them behind KYC walls, etc. Because if you do that, then those assets can't travel anywhere. And then there's no way for other ecosystems to access this. And that's what we care a lot about, like the permissionless bridging part. In terms of how other ecosystems can leverage it, without bridging, you can do it via oracles, which is also an interesting idea, where if PIT price oracles, for instance, can use the price of iAssets on Injective, then someone without having to bridge can technically take out a loan against it based on the data feeds of PIT. So let's say someone sees that, hey, this guy has 100 Tesla stock on Injective, he's good for getting this much of a loan on Solana without having to bridge. So that's an experiment we're running, again, early stages, but that's a way to do it even before the bridging goes live. So those are two very early ways to think about this.
Mm-hmm. Even though you guys are in the early stages, as you say, it's still, iAssets has done 1.2 billion in volume, which is not a small amount.
No, it's crazy. And I think a lot of it helped us sort of ascertain, I would say, our initial thesis, where people will trade assets if you give it to them first and there's something to do outside of TradFi. For instance, when Circle stock started trading, it was doing insane numbers. I'm a sucker for not having invested at the top because I guess the top was not the top for that stock. But we were very early on that. As soon as Circle stock launched, we launched it on Helix, and there was over $10 million in OI on just that asset, which is really insane. Where OI basically means open interest, so how much interest there is for that asset. And if we continue to be first, you can see the volume numbers continue to rise. So for instance, as soon as a stock starts trading or starts doing well, you'll notice that Robinhood shuts down trading for that asset. This happened with Figma just last week, where Figma stock was doing really well and retail users were prevented from accessing that stock. But if you can continue to have 24/7 trading of those assets, no matter if it's going up or down, that is a huge advantage. And that's why we think iAssets have done well, because you can go on leverage and we never stop you from trading. I know it sounds really simple, but that's where these centralized counterparts miss out, because they're so driven by making money or making profit that they will literally lock you out of their systems to prevent you from making money. Whereas in DeFi, the incentive mechanism is fully different, where we're not trying to make money off you. We're just trying to offer a product or service. So even if Figma goes up 10x tomorrow, we won't stop you from trading it. So I think that's where DeFi platforms can continue to shine and win.
Yeah, I think that ethos is super important. That's probably if you strip away all the detail and you go down to the basics, right? You have decentralized, you have permissionless, you have autonomous execution, and that is kind of how you, as a retail user who's trading, knows that you are not going to have the rug pulled out from under you because the rules have changed, or someone decided to close the market temporarily or whatever, right? So if those capabilities are there, then you would know in advance, right? You wouldn't be surprised. So that's that's like the philosophical difference almost between DeFi and TradFi.
Mm-hmm. No, I agree with you guys on that. But I'm curious, I would love a prediction on your end. 1.2 billion in total volume right now. What is the goal for the end of the year? Let's say 4 to 5 months down the line. And then is there an ultimate goal for how much volume you want iAssets to be doing on an annual basis?
We need to stop.
This is good. Yeah, we should start a prediction market. So I think at a very, very base minimum, volume should 5x by end of year. There's only 4 months left by the end of the year. So if we achieve over 5 billion, I think that's a very conservative but very good target, because it would mean we're pretty much the biggest platform for these assets. How much would I like iAssets to be doing? Traditional equities trade, I would say, upwards of $100 billion daily. So if stocks are truly on-chain or tokenized, you should be able to achieve some level of that number daily. So instead of us doing $1.5 billion over the course of 5-6 months, we should be able to do that every single day without fail. So will it take time? Yes, but it's getting there. I think it will be sort of similar to the SEX-DEX trade-off, where even today DEXs are only 10% of SEX volumes, but that's continued to grow. Now DEXs are doing over $100 billion a day across perps and across spot. And I think we will do the same with tokenized stocks or tokenized assets, where initially the margin, all of crypto combined, is doing less than probably 0.5 basis points of the entire equity market. even that might be generous. So even if that number goes to 5% of the total equity market, that's more volume than all of the sexes and dexes in crypto combined. So that's how I like to think about the numbers.
Yeah, no, that's totally fair. I think there's a lot of market opportunity there, and it's like very, very early days too. So even getting like double of that 0.5 basis point or whatever, that would be huge. So I also want to talk to you guys about the recent launch of SBET. That is an on-chain digital asset treasury, or DAT, via Injective's iAsset framework of SharpLink's $1 billion ETH reserve. Can you kind of talk through about how SBET can showcase the capabilities, why you guys decided to launch this, and what it might mean for future integrations? Give us the rundown.
Yeah, I'll keep my entire answer in less than 2 minutes because it's actually relatively simple to understand. So SBET is SharpLink Gaming. It's a stock in the stock market. Digital asset treasuries have become a big deal. You might be familiar with someone like MicroStrategy, which has been around for years. A lot of other companies are now saying, hey, what if we did a MicroStrategy type play with other assets like Ethereum? So SharpLink Gaming today is one of the largest digital asset treasuries. It's a digital asset treasury only for Ethereum. And all a digital asset treasury, or DAT, DAT does, is they acquire that token using some proceeds from the stock or the revenue of the company. I'm oversimplifying everything, but that's a good way to understand what these companies do. So a stock market, so a publicly listed stock company will literally go and buy Ethereum. And in this case, it's SharpLink Gaming. And there was massive interest for this. There's it added several $1 billion in market cap in less than a week. So there was clear interest, but there was no way to access this stock on chain. So we said, oh, hey, what if we tokenize this entire digital asset treasury, because people want exposure to ETH and people want exposure to institutions. But right now, the only way to get SBET is for you to open up a normal brokerage account or buy ETH. How else can you do it? So we created effectively a structured product, or an interesting product, where we wrapped the entire SBET asset, or this SharpLink Gaming asset, on chain, so you can trade it similarly to any other iAsset. So that's a very, very quick and dirty rundown of how it works. It's almost it was really funny. So Matt Levine is someone I look up to. He writes money stuff on Bloomberg. He called it. It's kind of ironic because this tokenized treasury is supposed to be something that allows institutions to come and access a token without having to buy the token. And now Injective has taken that and wrapped it again and put it back on chain, because what we realized is retail wants access to the institutional play. So it's almost like this loop, this hilarious loop where you just keep wrapping assets. So where does it end? I don't know. It ends when people stop having interest in having exposure. But that's a very good way to understand SBET and what it's done. We plan on doing a lot more of these structured products, because I think that's how we stand out. I don't think we stand out by listing Tesla or Google. It's good to have, but everyone will have that. I think we stand out by creating net new, unique products that you can't access on Robinhood or any other chain for that matter. So that's kind of why we always go down these routes. I think last time we had this call a couple months ago, we had done an index, an AI index that mixed together many major AI stocks and AI tokens, which was also an interesting product. So there's a lot coming down the pipeline where we're going to continue experimenting with a lot of these different structured products.
Yeah, no, that makes a lot of sense. On the structured product front, there's also the recent announcement that Canary Capital filed with the SEC to launch its staked Injective ETF, which I think the staked part is a key thing here. I want to know more about how you feel on the front of this type of ETF kind of driving mainstream adoption, both with retail but institutional investors, if it's approved, particularly on the unique staking rewards feature. I feel like that is something that is often discussed in the space right now. It's a big point that a lot of people are trying to get across with the SEC, but in the front of Injective, how does this kind of change the way investors can invest, so to speak, in the public markets?
Yeah, it's an excellent question. So easiest way to think about it is all of us are very familiar with staking and earning yield, but institutions are not. It requires a lot of hurdles for them to go and stake on a validator on chain. But the yields are juicy, right? Injective right now alone provides about 12% APY, which is one of the highest out of all of L1s. So institutions want access to that. What a staked ETF allows you to do is continue to earn that yield just by holding that ETF. So once this Canary Capital filing goes live, the idea is someone would be able to purchase this ETF and earn that 12% yield, and Canary would take care of all the rest. Like they would actually take those funds, acquire those tokens, stake them to the validator, and pass the yield on to the institutional investor without the institutional investor having to know about MetaMask wallets or exchanges or bridges or anything else needed for staking. That's really the value add, and it unlocks tremendous amount of capital. Because for us, 12% might seem like nothing. It's just another Tuesday. But for institutions, 12% is a great deal of money or yield, because traditional or TradFi yields are around, again, 4 or 5%. So this unlocks a whole new swath of investors and capital inflow. And it was actually interesting to see how much attention this got. I think every single news outlet picked up this news. Also, the SEC put up our policy recommendations on their website. We put together some policy recommendations on how to make DeFi more accessible, and a big part of that is allowing people to access staking yield. And yeah, I think the SEC is headed in that direction, where Paul Atkins, I think even yesterday, said he wants to write the next chapter of crypto innovation in America. You can never imagine Gary Gensler saying something remotely close to that. So it's overall very bullish for the space to have these types of products and to have the mark of approval or stamp of approval from places like the SEC. So that's it on a high level.
What would you say is like the biggest value prop on this front?
On the staking front or the staking ETF front? I think the biggest value prop is being able to acquire an asset as simply as any other stock. So being able to go out onto Robinhood and buy a stock and automatically earning yield as if you would earn dividends on normal stock. So you don't have to think about how it works. You can just go, click, buy, sell, whatever you want, and you get access. I think that's the biggest value prop. And the second biggest value prop is unlocking this new huge swath of investors that will never touch crypto. A lot of these big hedge funds, etc., are interested in crypto, are interested in the upside, but they will never get through the compliance guardrails that they have to access this. Bank of America will never access this. But an ETF product can easily be purchased by someone's Roth IRA account or their retirement account. That's what it unlocks: new capital inflowing and new yield for traditional investors.
Hey, never say never. You never know.
Yes.
In the beginning, you talked about on the Injective Council front how there are major players like Google Cloud, T-Mobile, BitGo, and others that are part of that entity, right? I'm curious for both of you, Brendan and Mirza, how is Injective kind of leveraging these partnerships to enhance both institutional trust and then infrastructure for products, maybe including the ETF, but also on the developer front as well?
Brendan, maybe you start with some
Developer
because people have heard from me enough.
I actually don't know. Like I said, I'm gonna cop out of this one because I'm fairly new. So you take it.
Yeah, no worries at all. So on the Injective Council front, it's really just a way for us to have our own board. That's a good way to think about it, of advisors who can help us to think about new initiatives and new ideas. So what that effectively means is once we have new ideas, so product launches, let's say something as simple as a new iAsset we're launching or a chain upgrade that we're conducting, we can meet with this council of advisors and get their take on it. So different entities bring different value props. So for instance, someone like Google Cloud and T-Mobile can give us the angle of a large Fortune 50 company, where they can tell us, hey, I don't think enterprises will like it if you, I don't know, do this chain upgrade because of XYZ reasons. So it gives us those takes, but it also gives us takes from people like Galaxy Digital or traditional trading shops, where as we think about upgrades or initiatives, they can help us ideate better on whether or not we should do something. So there's two advantages to this. One, these bigger enterprises or institutions get a early viewpoint into our roadmap and what we're doing next. And two, it allows us to iterate and think about these ideas before we go public with them, which is what many crypto companies are failing to do even today. They're still in this mode of build it and they will come, but that's not how the real world works. You actually need to prototype or ideate on these products with the actual end user or the end customer. So if you're trying to appeal to institutions, it's not enough that you're going to say, hey, we built it, and they just arrive. And like I mentioned or alluded to earlier, we learned this from our mistakes in the past, because initially we built this really performant L1 and this exchange, and we launched it with much fanfare, and then boom, nothing. No one used it. And when retail users wanted to use it, they're like, hey, there's no liquidity on this. And then we realized, hey, we need to talk to all these market makers and all these big trading shops like Jump or Galaxy. And then they gave us feedback like, hey, we can't use Injective because it doesn't have XYZ APIs that Binance does. It doesn't have these elements that we're used to using. So it helped us to ideate and realize that no one will just come for a new and innovative product if the end users haven't tested it or find a way to easily make money. So I think that's what this council is really for. So helping us get ahead or stay ahead of new initiatives. So not because we come up with cool ideas all the time, but it's good to have a viewpoint, not just from our community, but also from these larger enterprises and institutions that we're trying to appeal to as we ideate and iterate on our products. So that's how I sort of think about it. And I'm sure Brendan will agree too on the developer front, how it sort of helps us.
Yeah, after having heard that, I've formed an opinion. So I would say that there is some level of like brand recognition. So for example, a developer would have heard of Google Cloud, right? So if Google Cloud is associated in some way with Injective, for example, through the council, then you're like, oh, okay, this seems legit. Like, let's say, especially if I'm a Web2 developer who, is looking for a blockchain of some sort, right, to build on, then maybe the one that is associated with Google Cloud seems more legit, and I'll check them out first. That's one way to think of it. And I have seen in previous roles, right, if you have like a list of your council members on a placard or a wall, printed on the wall or something, a lot of people stop by just because they saw the Google logo or whatever it is, right? Some recognizable company name, like how are they connected to you? And then that starts the conversation. And if it hadn't been for that, they would have just walked past your booth. So yeah, there's something to be said about these like very recognizable brand names, especially in tech, and their ability to sort of lend its aura almost by association with us.
Yeah, no, that makes a lot of sense. And I want to be conscious of the time. I know we're nearing the top of the hour, and I want to get kind of a forward-looking perspective from both of you. We've covered a lot of ground over what's happened over the past quarter and year with Injective, but looking to the future, what are some things that you two really would like to see built or that are currently untapped that you think would be amazing on Injective, essentially? Like, what do you want builders to build?
Right. Okay, so we just launched EVM on testnet, and then mainnet has also launched as well. And so what will happen when we onboard EVM developers is the first thing that's almost bound to happen is that you're going to get a bunch of ERC20 fungible tokens, right? Because that's, I can't remember when I checked it, like 2021 or something, 75% of all smart contracts deployed ever were ERC20 contracts, right? Something crazy like that, right? So it's going to go through that stage, right? And then after that, people will be like, oh, what do we do with these tokens, right? And Injective has a multi-VM token standard, right? And that means that token can be converted between Injective's native denoms and Ethereum, or I should say EVM ERC20s, right? So we have that feature built in, right? And then what can you do once you have that as well? You could build a DEX, right? A decentralized exchange. And it's sort of like its core logic would be an AMM formula similar to Aave, Uniswap, etc., right? And that's quite likely to be built, one of the first few things to be built. But then like sort of throw back to one of the things that I said I was like really excited about earlier on, was that Injective has these native APIs, right, that are very specific to like what you might see on traditional finance, like instruments that you see on Wall Street, for example, right? And one of the key things there is an on-chain order book, right? Now that's something that you can't feasibly build in Solidity or an EVM, right? It's just the memory constraints, the transaction speed, etc. It just doesn't work, right? But Injective has that built in, and it works, and it's on chain, and that's within the Injective native, APIs, right? And so I mentioned precompiles earlier on. So what if you made a DEX and you built all the the periphery of the DEX using Solidity, but then for the core formula where the AMM formula would be, you just replace that with a precompile that calls the Injective on-chain order book. And that would be, as far as I am aware of anyway, that would be the first on-chain order book in a DEX, right? And that's something I'm looking forward to someone building, right? In EVM, I should say. I should qualify that statement. The other thing is like making a DApp as easy to launch as a token, right? So I think right now you can just go to some websites and fill in the details of your form, and then connect your wallet, press the transaction button, boom, you got your token. What if we could do that for a DApp as well? And then earlier on I mentioned as well ETFs, right? As far as I know, there is no TradFi or blockchain way to create your own ETF, right? Like I, as an end user with, I'm not an institution, I don't have limitless capital to provide liquidity pools, etc., right? I can't go and create an ETF, but in theory, I could do that in Injective, right? And so then what I'm excited about is actually making that happen, right? And what has been done with creating structured products. What if we could just make a web user interface that could that anyone could fill in, press OK on a transaction, and boom, you've got your your custom designed ETF with your custom rules. That would be really cool. Those are the handful or so that I'm excited about. Mirza?
No, I think that's a very comprehensive and great answer. Brendan's right. So the thing I'm most excited about personally is iBuild. So letting anyone launch their own app as easily as they can a token. Number two, earning yield on those tokenized assets or iAssets, whether it be through lending apps or let's say funding rate ARB. So there's many ways to earn yield in crypto today, but enabling that for tokenized stocks would be amazing, where you can passively earn yield on your Tesla stock without thinking about it. Number three, I would say I'm very excited about aggregators that work across different VMs. So for instance, Injective now will have this WASM layer and this EVM layer, and EVM will go live on permissionless mainnet later this year. So how can you sort of aggregate these assets in one DEX or one exchange where an end user doesn't have to know that there's two VMs that exist? It just aggregates all the liquidity across the board. I'm very excited to see products that they're not just forks. So this is a big issue in EVM land in general. Go to any EVM L2 or L1, it's pretty much the same fork of Aave on every chain or the same fork of Uniswap. I don't think that's interesting in any way. I think no one cares. Like if you go on Uniswap today, no one uses Uniswap on any chain outside of Ethereum, or they might, but it's probably less than 5% of the total market share. I think people need to take it a step further and think about new products that they can build. For instance, if Injective is this chain built for finance, what can we do that's interesting? For instance, instead of just building an Aave fork, what if you build a lending app only for tokenized commodities? So for example, being able to take loans out against your gold like you can in the real world. Or what if someone built an exchange only for trading FX? FX is a hugely popular element for retail. But right now, accessing FX on chain is hard, or no one really cares. So what if you build something that caters directly to the user bases? So I just want to see more interesting experimentation, because now that we've opened the floodgates of EVM, we've made it easier than ever for people to come and build. But I don't want people to build the same things. That's my big dream or goal to achieve in the world of Injective.
Yeah, no, that's totally fair. New initiatives, new kind of apps and everything. Build it away. Amazing. Brendan, Mirza, thank you so much for taking the time to talk today and sharing all your insights. And thank you to everyone for listening in.